as to the operation of our subsector. And it is, I think, more challenging, I would say, than discouraging for us to beef up our operations. And when we do, we're not going to do just for the sake of raising capital, but what exactly are we planning to achieve? We have already identified there's the approach to regulation to be risk-based. And risk-based will raise a minimum capital required for the risk base, and whatever kind of risk you underwrite will determine how much capital you will have. So we believe when the time comes, if the capital market is not wide enough to accommodate the demand for capital, we believe there will be an incentive in merger. And that incentive will provide, that merger will provide bigger players, stronger players. And it will even protect the insurance companies from the takeover bids we have been seeing from foreign players. If they are a strong player and they're well capitalized, the foreigners will come in and discuss with them as partners, not as a simple takeover. We have ensured that to encourage the local operators merge and get stronger, we have the policies of government like the local content policy, which encourage a lot of business to be given to local operators before it is taken out. So these are very good incentives. And with a little effort, the industry will adapt to the requirements of regulation. And we believe the market is growing beyond the borders of Nigeria. It is common knowledge that the West African Monetary Zone has opened a lot of opportunities to other subsector providers. Why not us? And we're discussing with WAMI, West African Monetary Institute, in order to see how the insurance companies can also enjoy the benefit of the ECOWAS protocol. Even if to start with, we start from the English-speaking countries before we get to the French-speaking countries. We have a lot on our plate, and I believe that, like I said on the floor, the insurance industry is the most interesting place to invest in now. One, it is cheap to get in. And two, the projected benefits we're expecting is going to make it worth for the investors to be there.
Some time ago, regulators and operators converged on Eco Hotels in Lagos to discuss the bank assurance policy. How far have you gone in implementing this policy?
Now, the bank assurance is just one of the many channels we're introducing to ensure better penetration. We are going to come up next month with a list of other various channels. For example, we are considering to even use the state government to enforce compulsory insurance at that level. We are also considering other professionals, the lawyers, the accountants, any profession that has a long list of clientele can be a distribution channel. And we believe all these untapped sources will now be open into the industry. The bank assurance has picked up very well. The banks are interested. We have received proposals from some banks and insurance companies, their intention to go into it. And we have agreed with the central bank that regulates the banking sector to work with us in ensuring that the operations are supervised properly.
The Commissioner of the National Insurance Commission of Nigeria, Mohammed Kari, with Channel's business producer Temple Ashaju. In other news of the market this week, the Debt Management Office August auction of the Federal Government of Nigeria, 3 reopenings totaling 135 billion naira, suffers massive undersubscription on Wednesday. Total subscription by investors was a meager 53 billion naira as investors asked for higher yields. That's as far as that market is concerned, it was a tepid one for this month. The next auction takes place in the second week of September. And this week, 2 of the biggest news in the market around 2 of the 5 listed Tier 1 lenders turned in their half-year earnings in the week. Let's start with UBA. Of course, this is one of the listed banks on the Nigerian market, operating in more than a dozen African countries, reporting a stellar performance at the first half or the first 6 months of this year. A pre-tax profit brought in by UBA was 66% year-on-year to 57.5 billion naira. The post-tax profit, that's net profit, was down, however, 35% year-on-year, as taxes shot up almost 100%. Despite that, the bank brought in other comprehensive income, slower, around 81%. Operating expenses for this particular lender was higher 20% within the period, and loan loss provisioning also up 104%. that was quarter-on-quarter basis. Despite the negative side of those earnings, the directors of UBA are proposing a 20 kobo cash dividend to the shareholders of the bank. Since the year 2017 started, the shares of UBA has been up 110%, and that's outperforming the Nigerian Stock Exchange market index by 72.5%. The Nigerian stock market index was around 36.35% when the market finished on Friday. And from Lomé, Togo, the headquarters of EcoBank Group, the Pan-African lender operating in a number of African countries, including East Africa, reports that gross earnings are declined 6% to 1.3 billion US dollars. This a bit of negative earnings from EcoBank. Revenue was down 11% within the period under review. Operating profit also dipped 2% to 360 million US dollars. The group pre-tax profit also declined 26% to 151 million US dollars, and net profit much lower, 19% to 123.4 million US dollars. EcoBank is reporting the basic earnings per share of about 43 US cents. That's negative 19% year on year on the figure that we're looking at. If you look, however, at the total assets, this bank reported a total asset that is much higher by 3% within the period under review, and total equity up by 12% to 2.0 billion US dollars. If you do those numbers in Naira terms, they're actually in the positives, but using the US dollar as the basis of computing these numbers according to a statement from the bank, that shows a lot of negative on the numbers, as it were. Of course, we're coming up in part two after the break. The Nairobi Securities Exchange posts increase in turnover, but net profit declines in the first half of this year. Plus, the head of the Nigerian Stock Exchange speaks on a new partnership with the insurance regulator to strengthen compliance. We'll be back in two.